Take a look at your charts. Bitcoin is heading up, and it's having cleared a major resistance level during Friday's Asia's trading session. Joining us now to discuss the crypto markets is Coinbase Institutional Head of Research, David Duong. Welcome, David. So, David, we're seeing prices a lot higher today than one would expect during a financial crisis, except maybe the Bitcoin maximalists will say, of course, this is what would happen. Nonetheless, what is actually going on in terms of this market sentiment that would lead to Bitcoin to go up to these kind of prices? Is it money leaving stable coins, for instance? Are people selling stable coins for Bitcoin? Is that what we're seeing here? Or is there a genuine bullishness? Does this market have legs right now?
I think the flight to quality is some part of this, and this is why we're seeing Bitcoin dominance at the 45% level, for example. I think crypto markets are firmer because many people are taking solace that there was a rescue package available for First Republic Bank. Many people shrugging off the idea of a 50 basis points rate hike by the ECB yesterday. But I think above all, probably on the macro front, a lot of people believe that a Fed pause or even rate cuts, which are now being priced into the second half of 2023, are very possible. So maybe traders are positioning for a return of some easy money policies, which, frankly, they were what propelled the last crypto bull market.
So you're looking at it as more of a risk-on world, ironically, because of the rate cuts, and that's leading to a bullishness. Does that hold for institutions as it does for retail, or where's the driving factor here? Where is it coming from? Is it from the retail or from institutional?
That part is really hard to say. I mean, we are operating in fairly low liquidity conditions at the moment, considering everything that's happened over the last week. At the moment, I would say a lot of institutional investors are still sidelined trying to figure out what the direction is going to be. Now, that's not to say that optimistically, like many people aren't cautiously kind of bullish about what's going on at the moment because, whether, all the stories that you've kind of touched upon this morning in terms of whether the industry wants us to be banked or not, a lot of that demand isn't going anywhere. And that is really important in terms of the reinforcement of the idea that there are fundamental arguments in favor of digital assets. And they present an alternative and solution to the points of failure that we're witnessing right now in the existing financial system. So I think many people have been bolstered by that. And that's also contributing to the medium to long-term positive view here.
But are they actually thinking about it at this present moment? I mean, this is in many ways, we're seeing these failures of two major crypto banks, or at least in the United States, when it comes to crypto, Signature and Silvergate, and a startup-friendly, tech-friendly Silicon Valley Bank. All of these seem to have a crypto underlying theme that crypto, at least the perception is crypto caused the problem in some way, and that led to some sort of chaos at these banks. I'm not saying it is or isn't. This is just the perception that this is what happened. So how does that reconcile with the idea that, this is a crisis in the financial system, let's run to Bitcoin, when it's like, crypto it may have caused this?
So two things there. I mean, first, when you say perspective, you have to concentrate on, well, whose perspective is that? Because from many people, and I'm not just talking about crypto investors, by the way, I'm talking about a lot of people in the investment community, because I'm still very connected to the TradFi community from which I came from. We really recognize that regulators were the ones who didn't get the banks that failed last week to acknowledge what should make a lot of sense in terms of customers, like the customers that these banks hold shouldn't just all come from one industry, for example. If you're going to have customers, few customers with a narrow focus, clearly you put yourself at a more vulnerable kind of position. So they didn't get Silicon Valley Bank to expand beyond the tech sector. And when that sector faced problems due to rising rates because of the central bank and its tightening path, well, yes, so did the bank. It was clear that should have been a vulnerability, and they didn't address that. So, I think right now, as far as what you're saying about the crypto space, crypto natives do see that, in fact, they might actually just be repeating some of the same mistakes by actively trying to force crypto companies to just bank in a few places. And I think you kind of pointed out that Brian Brooks actually was saying this as well, that the demand is there. You're not going to be able to stem it. So if this is kind of the path that they're going to take, I don't think they're going to be successful.
David, looking at next week, what's your outlook in terms of what support and resistance lines are you watching for Bitcoin, and what are you anticipating out of the Fed?
So hopefully we're famously agnostic to price action at this point that people would realize that. But I will say that short term it's a little more challenging because of the Fed, certainly. And I think there are three real paths for the Fed at the moment. We're seeing that effectively the Fed can either pause rates next week, which, I think like the distribution of outcomes is fairly wide at this point. They could hike 25 bips, then pause, or they can just continue on their path. I tend to think that the last path is the most likely, and that creates a lot of uncertainty in this market at the moment, because if they do that, basically they're acknowledging that, they had quote unquote solved the problem. Of course, they're trying to maintain credibility, right? Because inflation still is very, very high. They're trying to show that they are fighting this and they haven't given up on that quite yet. And I don't think the terminal rate, by the way, is as high as 6% anymore. It's probably down to 5.25%, 5.5%. But the risk to the market is that they're saying that there are no risks here. And that's not true. I think that they're still kind of lingering risks, even if they're unanticipated, and that the Fed needs to kind of respond to that. So we'll see how that kind of enforces the price action. I do think, though, that the floor for many of these, especially large cap names, is much higher now than it was before.
All right. David, thank you so much for your insights. That was Coinbase Institutional Head of Research, David Duong.